Afternoon, everybody. I'm Marvin Cole. I'm founder CEO of Ovamba, and happy to be here. It's our second year here, so it should be a good time, I hope. So what is Ovamba? Oh, okay. Something changed a bit. So Ovamba is what we call growth as a service. What we offer is not a loan, it's not an equity investment. We offer a revenue sharing arrangement in which the company actually acquires the underlying asset the business needs. We also have them outsource to us their core back office functions. That means we take on a lot of the pain points for our business that wants to grow in SME space in Africa, and we then help them grow their business much faster. We're sharia-compliant, I think one of the few ones in the world that happen to be so. And we really let SME grow by focusing on their business and growing their customers. One, best FinTech for global underfunded in 2017 by Bazinga, and with a global team, 50 plus people, primarily in Central Africa these days, working in French-speaking West Africa, and we're expanding from that zone into Ghana and Nigeria in 2018. I'll introduce you to one of our customers, real customer, real business. Mr. Chassie Lucas, importer of engine oil and motorcycle parts, left school at the age of 12, lifelong trader, never had a loan in his life because he wasn't so bankable. Not only lacking documentation, but also didn't have the collateral needed to get a sizable loan from any traditional lender. Now, his challenge is one that's common across many markets, right? His business is growing, his record keeping is generally very poor, and he doesn't actually understand the questions a bank will often ask because of lack of education, lack of background, and he can't really read the bank application form, which is very manual in most of these countries. And the FinTech applications are basically a bank application put on a phone, so it doesn't really work. What we've developed is an operating system that solves this problem. So our apps speak his local language, literally speak. So they actually speak in Hausa, Bamileke, Zulu, whatever it may be. Because we take over the back office operations, we have full visibility in his operations, and we centralize those operations through our own system and our own technology, and we share that visibility with him to allow him to make better decisions. Lastly, and this is also all real data, because we actually control the underlying asset, we're fully secured, therefore our losses are very low. And again, real story. Before us, when he started, he was always running out of inventory. He had to get cash from his business, buy inventory, wait for it to arrive, sell again. In 2016, he grew 110%. This year, he'll be at 450% growth and around 3.2 million in revenue. And what you see, and those are actually yellow squares, is actually our system when our people are in the field actually confirming delivery, et cetera, into one of the warehouses that we control but don't own. We have AIs that run in the background confirming identity, confirming the day's newspaper, that's a real picture from the right day, counting assets, et cetera, using machine vision to ensure that we actually know what's happening in every location that we take over and control. So this is actually a picture of the Ovamba ecosystem. We run our business fully on mobile, and not only is it for our customers, but also for every function in the business, including people who actually operate warehouses for us. So we have, let's call it Uber for warehousing, Airbnb type model that runs in background as an enabling technology. Our logistics providers, people actually move the assets around the country or around the region, and then our key parties. Now I want to show you something very briefly for what the experience will be like for a returning customer that is using one of our apps just to basically reapply to move forward again. And it's 45 seconds. Please do time me, because hopefully it should actually be how it works for one of our systems. Well, technical difficulties, my apologies. I'll keep moving. So what you would have seen is that in 45 seconds, because we actually control the back office, we know what his sales are. And we scale because we actually understand how different goods move inside the country. So all someone needs to do is confirm what they need in terms of support. We'll buy the goods from his supplier directly. He then saves his working capital to use for marketing and growth. And we then move forward to the next level, which is help him grow and scale better. We use facial recognition in everything that we do, not only internally inside business, but also for every customer, everyone who interacts with us. We also realize there's a reality people don't want to talk about in FinTech, which is that banking relies upon certain assumptions. One of the major ones is that your contracts will be enforceable. So whether it be a mortgage, whether it be a traditional lending contract, you assume that if someone doesn't pay, you have some sort of rights. That isn't always true in the more frontier countries in Africa. So because we actually take control, we have the ability of having possession, which is what lets us manage our risk in a way that doesn't rely upon the underlying legal infrastructure alone to solve a problem. Credit bureaus are not comprehensive. This is a global problem in most emerging markets. Like all others, we use alternative data, other sources, but we go, I think, one step further in that we look at the classic credit algorithm structure, which is willingness to repay and ability to repay, and we've said, let's remove optionality, effectively, by saying if you are willing to repay, and we actually do score for that, we remove the ability for you to say, I can choose not to, because we're actually inside your business, effectively, and the way in which cash is collected. We do heavy data analysis in the back end. So your phone goes home with you at night, it goes with you to your office in the daytime. We know where you live, where you work. We have all the data with all opt-in permissions that lets us actually make a decision about saying, I don't really need to ask you about where your home is, I already know. So the customer interface and the speed of decision-making is very fast from that perspective. We provide KPIs about their business. So we help them grow and understand. We have our own basic online learning system in the back end to help them do that. And let's us make decisions as well around where to focus, how to help them grow, and help build companies from, in some cases, 5,000 euros exposure to €500,000 exposure. And then we also build a system to internally prevent fraud, which is one of the big issues in most of these markets when you actually operate. All right, $18.5 million of deal flow that we've actually funded. Again, things have changed post-sending. But losses only around 3%, and that's only when businesses just don't move. Most referrals-based business. Few competitors. Actually, no companies actually offer a full service that we have, but alternatives exist in different categories. One second, one last slide. And it's a big industry, SMEs globally. And that basically is, we're growing with banks as partners. We're negotiating with a bank here in South Africa. It's been a year plus now, but we're actually taking over the operations in SME lending effectively in several key countries. And the business also said to us. Thank you.
Thank you. Questions from the judges?
Sure.
Hey,
Hello
Marvin.
again.
Is it on? Yeah. Hey, can you talk a little bit about how you are getting funding for these loans, since I don't think you're a deposit-taking institution?
Sure. So I think we're actually some things that we have up the platform. We use our own equity capital, and we also have investors. So we actually run a platform for institutions in the back end. Most of the capital comes from Japanese trading houses, so the Mitsubis of the world, who look at this as a chance to use their global trading experience to actually serve the SME market. And so we actually act as the agents on the ground effectively to manage the money that comes in, and then we distribute the resources to the SMEs.
Sorry, can you elaborate a little bit on that? I mean, so are they providing like cash debt, or they're providing products?
They provide cash.
Okay.
Yes. So
we
then buy.
Or,
yes. So
okay.
they provide. We have a fund, and we also have basically a small sharia-compliant peer-to-peer platform.
Okay. Thanks.
Yeah.
You go ahead.
Okay, thank you.
Sure.
So can you talk a little bit about the application process for businesses in order to be part of, I have a few questions, I'll go.
No problem.
The application process, and also it sounds like you're doing access to finance and also some kind of like a business development for businesses.
Yeah.
And you talked about the fact that you do like supervision and control over the goods, the inventory. Can you also elaborate a bit about that? Like what kind of AI do you have agents on the ground, et cetera? And also how many businesses you have currently on the platform?
No problem. So we have 800 businesses today that are very active. We've actually narrowed the base a bit as we've gotten the better performers to grow faster. And growth average rates have been around 500% per year now. The onboarding process for us usually starts with looking at, we work with a number of the large logistics providers in different countries. So look at who's actually shipping the most. So look at shipping data and movement of physical goods. And we also work with companies that are manufacturers that give us the list of distributors. So we actually work both with distribution channels and also basically import-export and logistics channels to identify the companies that are actually growing and have peaked in some form of growth. We then use that list to then identify the companies. We reach out proactively to them, get them on board with us. And the onboarding process is usually interview, understand their business a little bit in a key industry. So it's manual. That takes roughly around 3 hours. But from there, it's all electronic and just go you through your phone. Ongoing support from that point. In terms of how we manage the back office side, this is what people usually get a bit freaked out about. Everyone in this business already has a warehouse. In fact, the pictures you saw are existing customers' warehouses. So what we've done is we created a network in which we optimize space inside these different locations. So if you have a building this big and only this size used for your inventory, we'll actually allocate the other meters cubed to other clients effectively and optimize the space. And each client pays a storage fee, and the storage fee is then shared with the original owner of the warehouse. So we control the process without having any of our fixed assets tied up. We have cameras, GPS tags, scanners, et cetera, that just control what goes in and out, so we know. As things move out, we then know what should be paid back to us for our profit sharing perspective.
So you don't have people in every warehouse?
No, we don't need to have people in every warehouse, no.
Just first off, one comment. I think
Sure.
the ownership structure that you take over the goods is brilliant because it allows you to build the sharia-compliant version on the side.
Exactly.
Which is outstanding from an Africa point of view. A couple of questions. The first one is, are you profitable? Are you actually
Operationally, yes. So in Cameroon, we're profitable. Our African operations are. We're a US-based company.
Yeah.
So technology team and US legal costs. So we're at $3.2 million in revenue for this year, well, projected end of year. Will be basically a net loss of around $150,000. So next year we should be profitable.
Okay. And the second question I wanted to ask you is what, out of your total revenues, what percentage of it is coming from lending margin and what percentage of it is coming from logistics optimization?
So this is a great question. It's around 60-40 of kind of the margin. We're about to close a new round from the Japanese investors, and that's pushing down the risk premium that they assign, and that will increase the kind of the lending margin.
Okay, so this is a inventory working capital facility,
Exactly,
effectively.
yes.
So it's
Off
not
balance sheet,
It's
yes.
not personnel. It's not labor.
No.
All right. So the question is, what is your revenue and profit splits between you and your partner or the borrower, effectively, and how do you define that?
Sure. So I think this is the last question, I think, from time. Okay. So it varies by the industry that they're in. So if I just quickly go back here, which is kind of went lost form, I think. In things like agricultural products, for example, will take basically around 5% because it moves so quickly. So in cocoa season, guys turn inventory every 2 days. Depending upon some other things like in construction materials with rebar, cement, etc., it can be 1 to 2% based upon, again, how fast it turns. So it's always based upon a speed of inventory turn basis. So the faster you turn, the lower our split is because we understand the margins relatively well. After profit margin, yes.
Are we
It
done?
makes it very attractive to the SME.
No more questions. Thank you.
All right,
Thank you very much.
Have a
Give
good
him a
day.
round of
Thank
applause.
you.